Hello fellow compounders, welcome back. Would you like to earn $80,000 a year in passive income? In this video, I'll share a story about how Lisa, a determined young woman, uses the power of compounding, simplicity, and focus to create a dividend growth portfolio that will provide her with over $80,000 in annual dividend income. By choosing just one dividend growth ETF, Lisa is building a successful investment portfolio that allows her to pursue her passions without having to worry about her achieving her financial freedom. She is using a set it and forget it investment approach. This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor and you are responsible for your own financial decisions. 10 years ago, Lisa was just starting out and had $500 that her grandmother gave her to invest as a graduation gift. She had read a lot about dividend growth investing, which is where one invests in good stocks that increase their dividends every year. She also wanted to keep her investment program simple. She was inspired by the great visionary Steve Jobs, the founder of Apple, who once said, "Focus on simplicity. Simple can be harder than complex. You have to work to get your thinking clean to make it simple. But it's worth it in the end because once you get there, you can move mountains." Lisa opted for the simple solution of using a low-cost dividend growth ETF. She selected Schwab's US Dividend Equity ETF, ticker symbol SCHD. The Schwab US Dividend Equity ETF is an exchange-traded fund that seeks to track the Dow Jones US Dividend 100 Index. The index is composed by the 100 high dividend yielding stocks that have paid dividends for the last 10 consecutive years and have the financial health to extend that streak. The fund selects its constituents from the broad US stock market, but excludes REITs, real estate investment trusts. Then it filters out the stocks that don't meet liquidity requirements, have market caps smaller than 500 million, and that haven't paid dividends for at least 10 consecutive years. It ranks the stocks that meet the criteria by annual dividend yield, then excludes those that rank in the bottom half. The remaining stocks receive a composite score that equally weights four metrics: free cash flow to total debt ratio, return on equity, yield, and the 5-year dividend growth rate. The index ranks the stocks by their composite score and retains the current constituents that land in the top 200. The index then adds the highest scoring newcomers until it has 100 firms in the portfolio. While this buffer can omit more qualified stocks in favor of current holdings, the reduced turnover and transaction costs make it a good trade-off. The index reconstitutes annually. Finally, the stocks that make the cut are weighted by market cap. However, the index caps each stock's weight to a maximum of 4% of the portfolio, and each sector weight is capped at 25%. The top holdings of SCHD as of April 11, 2023 are Abby Inc., PepsiCo Inc., Verizon Communications, Amgen, United Parcel Service, Coca-Cola, Pfizer, Merck, Chevron, and Cisco Systems. Each has around a 4% weight in the portfolio. SCHD has an expense ratio of 0.06% or 6 basis points. At that price, it's totally worth it because it takes away the burden of having to do research. SCHD has a 5-star rating from Morningstar. Lisa decided to invest her initial $500 exclusively in SCHD to keep her investment strategy simple and focused. She believed in the power of compound interest and understood that by consistently adding funds to her investment and reinvesting the dividends, she could maximize the returns over the long term. Her investment program is simple. She buys $500 worth of SCHD every month and just sets it and forgets it. She started her investment program in December 2012, about 10 years ago. She has diligently invested in SCHD, consistently adding funds and reinvesting her dividends. She made it a habit of saving a portion of her income each month and earmarking $500 for her investments in SCHD. This consistency and discipline are critical to the success of her investment strategy. By sticking to her plan and focusing on her long-term goals, she can avoid the temptation of making impulsive investment decisions based on short-term market fluctuations. Let's see how her investments in SCHD looks after 10 years compared to an equivalent investment in the S&P 500 index. By harnessing the power of compounding, after 10 years, at the end of 2022, Lisa's portfolio is worth $117,819, and it's paying $3,814 in dividends. The dividend growth rate for the past 10 years was 11.7%. Her portfolio outperformed VOO, which is Vanguard's S&P 500 ETF, which checked in at $103,950, and it's paying $1,698 in dividends. If the dividends of SCHD continues growing at 11.7%, by the year 2042, the annual dividends of Lisa's portfolio would be $82,913. After 30 years from the initial investment, Lisa would have contributed $180,500. That is her $500 initial investment and $500 a month for 30 years. She would have received and reinvested $586,416 in dividends and have a portfolio worth around $2.3 million. Not bad for a simple set it and forget it investment approach. By choosing SCHD, Lisa enjoyed several advantages, such as diversification, simplicity, lower costs, and not having to actively manage the portfolio. However, there are some disadvantages, such as limited international exposure and less control over the specific companies in her portfolio. Despite the drawbacks, Lisa believes the benefits outweigh the potential drawbacks. Tell me, what did you like or didn't like about Lisa's dividend growth portfolio? Did you like her simple solution? Let me know in the comments below. By the way, if you're an active investor and prefer to pick your own stocks, I did a video on how to do this. You can check it out in this link. Thank you for watching. See you in the next video, and remember to always be compounding.